thank you, Carsten Borring, Head of Listings and Capital Markets at Nasdaq Copenhagen, for taking the time to join us today.
Always. It's a pleasure to be here.
Yeah? Are you sure?
Yes.
You haven't started the interview yet. No, jokes aside, as we've been talking a lot about today, it's a rough market out there, and many of the companies that we work with and that you work with on a daily basis face a harsh reality right now. So, share prices falling, investors panicking, perhaps to some degree, but two companies that have gone public then to secure financing for their projects. At this point, what do you think they need to do to ensure continued confidence from the market and from the investors?
First of all, they should feel lucky because they managed to go to the market. Even though that is tough times now, and after 10 years with a big rally for share prices and raising capital, we are getting used to it's easy to go to the investors to ask for money. But people like us who have been in the industry for a long time, more than 20 plus years, know that there's a lot of ups and downs, especially in the biotech market. And this downturn, as it is right now, and it seems really tough right now. We have seen it before, and I will say, in comparison with some of the other downfalls we have had over the time, I would say the biotech market and the life science market here in the Nordic are much more robust than it has ever been. It's not to say that it's easy to be in the middle of the storm, because it isn't. We know that, and I feel with many of the CEOs, because we work very closely with our listed companies, and we know all the CEOs and the CFOs, and we know we have been celebrating them coming to the market, but we also see the struggle they are in right now. And back to what I said, they should feel lucky. Because it's not for everyone to be on an exchange. And even though that you see the price tag every day, every minute live on your phone or your screen, and all your friends and family can say, hey, you're 80% down. I had a look at some of most of the companies here today. They are between 40 and 80% down, and it's tough to see that. But on the other hand, it's only the tip of the iceberg. Because with this strong ecosystem that we have, and especially here in the southern part of Sweden, there's a lot of private companies. And even though they don't have a price tag on it, they will suffer a lot. So you have the advantage of being a public company because you can change your entire investor base in times like this. It's all about risk profile from your investors to look into the companies and say, oh, maybe I'm too scared now. But you have the possibility to go out and find new investors, attract them, and start a new journey with them. It's impossible if you're a private company right now and you have drag-alongs contract, and maybe you have the possibility as a round investor to say stop if you don't want to invest more in the company, and then you can drag all the other investors along, and then you're just finished as a company. So it was a long introduction or a long answer, and maybe I didn't answer, but we feel with our companies, and it is a nightmare out there, but it was needed. Unfortunately, we have seen it for many years coming. I spoke to people 4 or 5 years ago that they said, I've gone cash now, Carsten, because we can't have these price earning numbers or turnover numbers or key numbers that we have is too high priced, and now we need to maybe come back to a more normal level.
So, and on the flip side of the question, what should the companies do then? What do you think or how do you think investors should act when they see market caps imploding around them? How should they act in times like these, you think?
Panic and run. No, of course, it goes hand in hand. So we have the companies, and they've been able to attract investors the last couple of years with a strong story and a strong go-to-market strategy. And the good thing about biotech and pharma, life science in general, is that the market is not gone. It's not like a retail market where people are afraid and can't buy anything, or maybe you are not able to get all the things you need to put into the car because there's a slow demand, supply of all the things that are going into your retail product. Here you still have the market. You still have the story. You used to be able to talk to your investors about it is a great journey you're on it, and now it's half price. So if you have worked closely with your investors over time, there should be, and I can see, of course, it's not the case in all companies, but you should be able to raise money right now. And what you have to do as a company, and also what you have to do as an investor, is good to go to events like this, because it's more important than ever. Because now you have to pinpoint, where do I want to put my money now as an investor? You are used to be on, you couldn't fail over the last 5 years. You're just throwing money away and you will still earn money. And you feel like Warren Buffett or something. But in these times, you really need to cherry pick your investments. And you don't have as much as cash, I believe, that you used to have. So you also need to be more cautious where you pick your shares. So as an investor, go to events like this, talk to the companies, meet the companies. Arosel, the story that just were here before, they have only declined 40%. I guess it's because they have a product, they have a turnover, they have a plan to go positive on their spendings. That's a story that companies need to tell the investors. There is a way forward. I don't need 200 million euros right now, but I can struggle the next couple of years, and I have a great story.
So my main takeaway from all of that is that we have a very smart group of companies and people here who came to this event.
Yes, certainly. It is, you need to, as a company, sign up for your events, and for investors, come here and listen, because you need to figure out, and it's not because you can say, I know there's maybe there has been a lot of people today, and it's really amazed to see what you can achieve, but they all have a different risk profile. So, and that's also what we need to think even more about right now. What is my risk profile? Because maybe some of your friends you have been used to talk to have a different one. In an upgoing market, it does mean a lot, because if you're following a high-risk roller, you will only have more money. But in this market, you will lose a lot of money potential. So you need to look inside yourself as an investor, figure out, where's my risk profile? I am more will I go with companies that have a turnover already and a product to the market, or will I stay tuned to potential where people are going into the lab, and should it be clinical, or should it be phase 1 or 2 or 3? It's up to you as an investor, but you have fewer money, so think carefully where you put them. And also one thing that what I would do, even though I'm not allowed to invest a lot, I will go to see the current investor base in the company. Because many of the biotech companies that we have listed over the last couple of years, they have strong investors with deep pockets. And even those companies have been slaughtered, so to speak. But we know they have the money, so if you are a private investor, go with the deep pocket, because there is a lot of these companies. Also, the Norwegian company with Carlsson, they have a good investor base. They managed to raise capital last year. They are also declining in share value. Maybe there's a good opportunity there. But it was not It's not my, it was a private opinion. It was not a Nasdaq opinion because I'm not allowed to say anything. But in general, I would look for the investor base, the product, and the story of the company.
So coming from a few years now of record IPO activity, I mean, last year I think was the record year.
Yeah.
Some 600 listings all over. That IPO boom has, of course, then now slowed down to a complete stop. You could say.
Almost a stop.
What do you think is needed to see some kind of uptick in IPO activity again? Is it going to be a short-term relief, or do we need like a big shift in the market?
I think that there was a panel before with 4 very clever people, and I think we need to see the interest rate needs to stable at some point. We need to figure out what is the interest rate going forward, because if you need money, it's the price of money, and we have been used to that the price of money was a big zero, and now it costs some money. We need to figure out how much, because it has a directly impact of the value of the company if you take a discounted cash flow model and convert it into today. Then we need to look at the inflation. That's also important, especially for private investors. They need to figure out how many money do I have after I've paid my house, my petrol, and everything else, food, blah, blah, blah. But I need to do some savings. So maybe I can go on a pension in a few years. It's just prolonged 10 years right now, but it will come back. So we need to figure out that, and maybe also with the Russian guys, they need to go home, and we can calm down in that part of Europe. And then we will see some deals being done. And we see them already, as it was mentioned with AstraZeneca, that have done a deal. We have seen Nordic do a deal and buying a a biotech company. And these deals will go on and on and on. And when I looked at our life science list or healthcare list on Nasdaq Nordic with more than 120 companies, I'm sure some of these companies will be bought. So it's also a part of the game being listed. So we will see the first IPOs coming out maybe late Q1, early Q2 next year. But it will be companies like the ones we have seen, the last one here. They will have a product. They will not only be cash burning, but there will be an opportunity to put money into it and raise the sales a little bit faster. That's the companies we will see. And right now, everybody just needs to adjust to new prices. It's just like in an ordinary household. You know your house were maybe 10 million worth last year? No. Mine in Swedish kroner maybe. And now it's only 6. You need to figure out, oh shit, I've lost 4. But you're also paying less when you are buying a new house. So that's the game going on right now. They need to price adjust on both sides and say, okay, maybe I was a lot worth last year, but that's not the future. I need to recognize what I'm worth now.
So maybe a little bit tougher question then. Seeing the influx of new companies to the stock market and to Nasdaq in particular over the last 5 years. And now we see a lot of maturing companies who need to raise cash, and they, in some cases, have had quite a hard time doing that. Do you think that the market conditions, along with or in combination with Nasdaq's eagerness to put new companies on the market, has created somewhat of a bit of a toxic cocktail for the companies at this point?
Yeah, it is a difficult question, and I'm not able to answer it 100% because I don't know. But what I can see is, of course, that what we normally say, look at Nasdaq or in the exchange industry in general, that is that we are a mirror on the society. So when things are tough at Nasdaq, they are tough everywhere. So it's not because our competition or our offering is better or worse than other places. People just need to adjust to the new order of how the whole system works. And if you look at when you took a bank loan last year, many of the, for instance, private equity companies, big companies, they can go out and it was zero interest rate. Now they are paying 10% in interest rate. And many of I've seen some of the loans to some of our smaller companies is 25%. But is that high compared to a very large company paying 10%? I don't think so. But we need to adjust to it. And some of the companies, unfortunately, when we see times like this, they will not survive. If you look at the bankruptcies for companies right now, it's high. We just have the statistics in Denmark, and it was the highest number. October was the highest number where companies went down since, I don't know, 2007 or something. So it is really a tough market out there. Have we been too eager to put companies on the market? Yeah, but back to we are a mirror, and if the smart guys we saw in the panel before, with 4 people saying, okay, you can go to market, of course we should deliver that kind of a service. So, and I think that also what we have seen here is, maybe it's my mom calling, I don't know. But
it's your escape call.
Yeah, exactly. Thanks, Peter. No, but I lose.
We can go on to the next question.
No, but it has been great to see that many companies go to the market, and they needed funding. And if they didn't have went to us, it would have gone to seed capital or private equity capital or bank loans, and they will be in the same situation. And back to the first question, I think that the companies that have gone public, they are more robust, and there is some stickiness. We saw that. I've been here so long, so I saw it also in the financial crisis in 2009 and 10. There's a stickiness for these companies to find new investors and try again. We didn't lost that many companies at that time, but of course you have a point in that we have really listed a lot of small cap companies, and now we have to see how strong ecosystem that Sweden really has, because we have been bragging about Sweden for a long time, and we feel proud of all of us that Sweden is so strong on the small companies. Now we have to see how strong they are.
And in relation to that question, then seeing that the current conditions is in many ways a baptism of fire for companies who have gone public recently, who have never experienced this kind of downturn. Would you say that, or how do you at Nasdaq then maintain the attractiveness in the public market as a funding platform going forward?
Going forward, we just have to show that the companies we have attracted will survive and come back at some point in share price and market cap and deliver what they have talked to their investors about. And we will see that. I'm pretty sure of that. And also when we talk to, and you mentioned we have listed a lot of small companies over the last couple of years. And we have a lot of meetings with our First North, especially First North companies and the CEOs, and saying, maybe you feel you're doing all the right things, you deliver on your targets, but your share price is still declining. Hooray. Talk to investors. Talk to some of the large cap companies in my country and also in the C30 index, or S30 index. They also decline 60 and 70%. So it's for everybody, as it is difficult times out there. So it's not because the offering is better or worse than the alternative. I think that our attractiveness will come back in the market because people want to, at least in my mind, I would rather have an investment in a company that are listed, because then I can trade it when I want to, than to have delivered some money into a private company where I can knock on the door and nobody opens the door. So even though that the market is difficult right now, there is liquidity in the market, not as we've been used to, but it will come back.
So, seeing as it isn't the first time that you've experienced these rough times, what are the signs you are looking for, and what will make you believe in a new bull market again?
Oh, bull market. I'm just looking for a stable market right now. Some of the indicators that we are looking at internally at Nasdaq is one of our best indicators for risk in the market is the Nasdaq BioTech Junior Market. It's an index for healthcare companies below $5 billion. That's what we call a junior market in the US. So compared to First North, it's nothing. But at least it shows some trends. And what we overlooked last year were that this Nasdaq BioTech Junior Index, it went down since February 2001. So 21 last year. February last year, it went down. Even though that we have record with IPOs, we have record with biotech companies also in the US, they were all falling in price after they were IPO'd, but they still came. So it went down 60% last year, and we didn't see it in the Nordic. So we went into 2022 with, okay, it's okay market, and since it's gone down here as well. So I would look for the US, and when I look at this Nasdaq BioTech Junior Index, it has stabilized right now. And it's even been up 50%, but it's 60% down and then 50%. So it's not the same, but at least it's more stable and a little bit upwards. And with the inflation down, Russian out of Ukraine, maybe some interest rate that needs to be stabilized. I think we can see maybe some more smooth water going forward. I don't think a bull market. It will take time. So it's a sad news for investors in small cap. We will first see it in the large one. And then the risk appetite will come back, and then we'll see a rally. So it's for you as an investor, pick your stocks right now, buy them. Maybe it's not the bottom right now, but it's pretty close. And the upside is bigger than downside right now.
So that pretty much answers my final question, actually, which was what are the strongest argument that you from Nasdaq would make for actually investing in life science at this point?
So it's cheap right now, I would say, at least cheaper than it used to be. And there's a good and lot of opportunities to pick your shares and where you strong believe in what sector, not sector, but in what part of a life science. Both matureness of the companies, but also in which diseases you want to. And it is a bargain right now, because you thought it was a bargain last year. The story haven't changed. We're still dying of cancer. The market is still big, unfortunately. So it's out there.
Great. Thank you very much for your time, Carsten.
Thank you.